This video is part of a series we're doing on financial reports. How to look at the financial reports for your business, read them, understand them, see the opportunities, and then the potential for growth and greater success. So today we're going to talk about the profit and loss. Let's get right into it. Here is our profit and loss for ABC Salon, a fictitious company that I've put into numbers. Hopefully you'll be looking at your data, your accounting data, your bookkeeping data, inside something like QuickBooks Online. That will allow you to see things, click on things, have it expand. I can explain that as we go, and view the data live. I have put it into this format to make it anonymous. Okay, so to start off at the top, we of course have our income section. So this is going to represent all of the money that is coming in. So as I'm looking at this P&L for ABC Salon, we see that there's sales, $216,000. First, we can call it, there's a quarter. We're looking at a quarter here. Q2 of 2024, April, May, and June. So $216,000 was brought in during that time. It's all tagged as sales. So here's where I think there is the first opportunity for improvement. At a minimum, I would say we want to see services, we want to see retail. If there is color, we might want that. We might want to have more than that too. Do we have spa services? Do we have massage? Do we want to call those out? Hair extensions, is that part of our business? If we can add some detail here, then we can look at it and we can see trends. So right now we're looking at a specific period of time, April through June, but we can also, using our software, look at comparisons. We can look at April next to May, next to June, and see trends, see things that are happening. But we can't do that if we don't have the detail. So that's what I would want to see there. Here is our cost of goods sold section. So for salons, we follow the profit first methodology. So we want our cost of goods sold to represent direct costs, the things that are used as soon as the client pays. So when they check out and they pay, let's say they buy some product and they had a color service done, you know immediately part of that money needs to go to the stylist that did the service and part of that money needs to go to replace the product. Those are our direct costs. And so these are shown pretty well in this example. So that's broken out. We can see that there's about 12% for job supplies. And here I think there might be another opportunity to break things out. We could have back bar and we could have retail or products sold. By splitting those out, we can get better insights into what's happening within the salon. Similarly with payroll, having the payroll number and seeing the percent is great, but maybe we want to see commission stylists, maybe we want to see support staff, maybe we want to see associates. So don't be afraid to add some detail, to add some categories and some breakouts. It might be a little bit more work, but the reward is going to be the insights and the knowledge so that you can make more informed business decisions. So as I'm looking at this, in this case, payroll is about 50%, and when you add in taxes, we're about 55% of our money coming in is going towards payroll. So I would say that's a little bit high, but not scary high. Salons can get that down to 50, even 45. And so if we're paying our people 50% commission, but they're also selling retail products, that's how we can get that average below 50%. So this is a little bit high. Potentially their support staff is high. That's an area to look into. Maybe their commission's a little bit out of whack. Maybe it was just a strange period. Maybe they did a lot of pay time off during this quarter. So always want to investigate. We're looking at things from a high level, and this is going to tell us the things we want to dig deeper into. So after our direct costs, in this case, ABC Salon has about 33%, just under 33% of the money left. Ideally, we wanted that to be closer to 40%, but 33% is not bad. We can still be profitable with that. So we can come down and look into some of their other, slide my little video up here. Okay, so we can see that their total expenses are about 19%. So That's not using up all of their 33. This is actually not bad. And so we can kind of look into this, what's going on. Very little advertising and marketing. Nothing to explore there. They have a lot in Ask My Accountant. So when we're doing our books and we're categorizing things, we want to really be careful that we don't throw things into Ask My Accountant, into miscellaneous, into other expense. We really want to know where things are. And maybe we have to throw something in there until we get some information, but that should be temporary. And we should be able to move that and solve that. Now when we're in our live QuickBooks, for example, we can click this number and then it will expand into what the makeup of that category is. So in this case, I just downloaded this and added it here. And so we can see that they have all of these different transactions that are inside Ask My Accountant. Some different transfers of money out, some loan payments, looks like some company match for simple IRA. And so these things, and I did change all these names to be anonymous: Sally Forth, Betsy Roth. None of these are real people for this fictitious company. So we want to go through and, okay, well, a company match, that should be 401k contributions. That should be an expense account listed somewhere. We want to be able to see that. Loan payments should be either marking the balance of that loan down, which means it shouldn't even be on here. In the profit and loss, when we mark a liability down, when we pay a loan, that's a balance sheet item. We can talk more about that in another video. Or it'd be interest. We might have an interest component, so that would go to interest expense. So we want to go through that. We want to categorize that and ideally get this kind of account, get miscellaneous, get other expense to $0. Bank charges and fees, just $5.95. Maybe there's an ATM fee or something that happened. That's pretty small. Entertainment. According to IRS rules, we can't actually deduct entertainment. Entertainment is not a viable business expense. In this case, I looked at it, and this was actually a retreat. So assuming there was some business purpose to that retreat, they went over some things, maybe some team building, whatever. This should probably be training, maybe training or in education. Maybe they have a category for that that just isn't used in this example. So that, again, recategorize. Insurance. Over 2% for insurance, that's kind of high. So again, click on it, explore it. Why is it high? Maybe they paid their annual premium during this quarter. Okay. So that would mean most of the time it's more like 0.5%, or 0.6% when we look at the whole year. Great. Interest paid, 1.56%. This is the kind of thing where obviously we'd love to get interest paid to 0, but that isn't a switch that we can flip. We have to work on paying our debts down. It's something to be aware of. Are we staying on top of those? Is it growing or is it okay? Legal and professional services, that's looking pretty average there. Office supplies and software is actually quite low. Let's see, I love this office journal and administrative expenses. And maybe these accounts could be combined. It just doesn't seem like these need to be separate. It seems like they're kind of saying the same thing. Rent and lease around 8%. That is about the target that we want to get to 8, maybe 7.5. And that's not necessarily finding better rent. It's making sure that we're bringing enough revenue for the rent that we are paying. Obviously, moving, changing locations is a huge endeavor, but this is just kind of a metric of how we're doing with the space that we have. In this case, they're doing pretty well. Security system, simple IRA match. So they do have some that was categorized to that. Looks like they just need to take some more of those things that are in Ask My Accountant, move those to that simple IRA match account. Some other taxes and licenses, some utilities. So they come down to 19.15%, gives them an operating income of 13.67%, 28 cents of interest. Very exciting. It doesn't change that number, so they end up with about 30,000 of profit, just under 13.67%. So in this case, I would say this Salon, ABC Salon, had a great Q2. This is not the most profitable a salon can be. Salons can get to 15%, they can get to 20% even. So there are opportunities. So as I'm looking at P&L like this, I would say I want to look at payroll a little bit more. I want to understand, see if there are things that we can do to make that a little bit more efficient. That does not mean going and firing somebody. It means where's that money going? Are our schedules efficient? Is our support staff the right level? And then I would want to categorize this to get some more clarity. But in terms of most of these expenses, it's looking pretty good. Maybe understand insurance, what's happening there. So there we go. That is a great way to work through a P&L for your business. I love to run it for a period, and I love to have this percent of income column that can really help you to see where your money is going.